Hey guys, Josiah here at EasyCaters.com, and today I just wanted to answer a quick question that came in from a customer. I had some questions about using volume price style analysis on the relative volume indicator, and also wanted to know how I would analyze a particular stock that he was looking at, and that stock was RDN. So first of all, I don't typically look at the relative volume indicator in the same way that people teach you to look at the raw volume histogram. The idea behind that, the volume price analysis type of thing, I'll switch over here so you can see an example that I found just searching Google Images. They teach that you should see volume expanding in the direction of an up move in price, or in the direction of a trend, and then price shrinking, or volume shrinking, as price pulls back from the direction of the trend. And so that's confirming volume confirming the direction that price is supposed to be going in. Then it shows a divergence idea here, which is that volume decreases in the direction of the trend and increases against the direction of the trend. That's volume kind of diverging from price and giving an indication of weakness in the direction of the trend and a possible reversal and that type of thing. I think there's probably some value to that type of analysis, but I've never actually used that much. And I don't think it's a valid way to look at the relative volume indicator. There's a couple of reasons for that. One is that typically I'm using the relative volume indicator on a relative, I guess, presentation style instead of an absolute presentation style. So, the volume subgraph here is plotting the actual height of, of the volume, not the volume relative to the average volume. So down here, we're looking at this in terms of percentage relative to the average. And so these bars, obviously, if you compare to the normal volume bars, they look substantially different. And, you're not going to have some of the same patterns show up in the relative presentation as you would in the absolute presentation. The other thing is that not only that, but we're actually not looking at the same data either. We're looking at volume divided by the range of the candle. And so this is, if you look at this, you'll see that some of these bars are high on the relative volume indicator, whereas they're pretty small comparatively on the normal volume indicator. And the reason for that is that we're actually not looking at volume in a raw sense. We're looking at volume divided by range and taking an average of that value and comparing the current bar's volume per range to the average volume per range, and seeing if it's high or low compared to that average. And so because of that, in addition, I think that's probably invalidates the volume price analysis type of approach to this, when you're using the relative volume indicator. So I just wanted to mention that to Walter and kind of explain why that is. But that said, the way that I would look at this is that I'm looking for, well, first of all, I'm looking for the obvious thing, which would be the highlights that you see on the chart. This is basically, and what we're looking at with the volume per range is essentially how easy price is moving, or how difficult price is moving. So if you take the volume divided by the range, it's essentially telling you how many shares it takes to move the price of the stock a given number of dollars. And then if you take the average of that and compare the current bar to the average, then you're saying, okay, is this bar moving, taking more dollars to move, or more shares to move the stock by X number of dollars, or fewer shares to move the stock by X number of dollars. And so that tells you, is price moving easily and freely, or is it moving with difficulty? And so this is essentially telling you if you're in an area of the of the chart where there are a lot of limit orders. The limit order book is thick, and there's a lot of limit orders clogging up price movement and making it difficult to move, or whether there are few limit orders there, and so price is moving more easily. And so you can see when the price highlights, those are typically indecision candles, candles in the range of a prior candle, that type of thing, where there's congestion going on. And where you a lot of times will see the easy movement, the free movement, those are on candles that are moving up out of ranges and trending. And you'll see wider range bars and that type of thing. So that's what we're looking at with the relative volume per range. And so the way that I approach looking at a individual price chart is to look for price to have, moved. Which direction is price moving, essentially? The price moved down into this area here, as you can see, and then we had a volume signal, and that indicates to me that support came in at the low of the pullback. Then, like over here on this up move, you see we moved up, and then a volume signal happened, and to me that says that that supply came in up here at these highs and halted the price movement. So you'll see that I'm not looking for price to expand in the direction of the move or decrease against the direction of the move. I'm looking for volume flares essentially at the extremes. And so you can see on this weekly chart over here that that's pretty clear. You have volume flares at the highs, the lows. We have volume flare at the low down here. We have a volume flare at the low down here and a high up here. A little bit of one up here at these highs. And you can see that also in between all of these, we had some interim type of in-between signals where we pushed up, pulled back, and at the lows down here, we had a support signal come in before we moved out. Then we moved down here, hit a low, bounced up, and we had a signal. And so this would, it's not exactly clear here, but I would take this to mean supply came in since we just bounced off these lows here, and then we followed back down. And you can, in that kind of case where it's unclear on a particular time frame, again, price is fractal, so we would have to kind of zoom down to a lower time frame to see what's actually going on there. So we had volume come in to support it, then volume came in at these highs to offer more shares, and so we pushed down eventually. We kind of had this situation where we pushed down, then tested above again before failing. And so you can see here, and this is something that you'll see a lot. You'll have a volume signal to halt a move. As we came down here, volume came in and halted the move, halted it again here. But then you'll see as we exit a range, a lot of times you'll see as you enter a range, you'll have a volume signal, and then as you exit a range, you'll have a volume signal. And that essentially is the range finally resolving itself. Whatever supply or demand was left over is taken care of in that last candle, and then the next move begins. So then we have a lot of shorting coming in here, churning through that level and resolving this range breakdown. And then down here, after we've made this big move down, we have volume come in again, indicating that support is here. So that's kind of how I read it. Like I said, I don't look for volume expanding in the direction of a move or decreasing against it. I'm looking for just these kind of one-off flares to happen after a particular direction has, the price has moved in a particular direction. And so you see up here at the highs, there was a signal, moved down, had a signal here that was not broken above. So we churned through some support here. There was somebody actually trying to buy here, and they kind of got plowed over. And then price continued down. We had this inside candle with two volume signals in a row that led to a small bounce. Hit some supply here, some demand here. We found some support and then eventually broke back below. And again, if you zoom back down into a lower time frame here, again, I would expect to see a churn signal as we exit this small range that had developed here. we have this range develop, and then as the range resolves and breaks, then inside this wide range candle, I would expect to see a churn signal indicating that that range is resolved. And here's another tiny range where there's probably a signal embedded inside this candle on a smaller time frame. We probably have some tiny time frame signals at the lows, one at the high, low, and then as we exit the range again, we have a final signal kind of timing the exit. So that's kind of how I look at that. So I'm looking for the highlights particularly, but sometimes you're not going to always get a highlight. And so here's a good example right here where price had pulled back down from these highs. We had a volume signal here. And I would kind of be looking for, in this inside candle, I would kind of have expected more of a volume signal on this candle, but we didn't get a highlight. But if you look down here, in this kind of case, you can see that the volume, the relative volume per range did increase from the prior candle, even though it didn't reach a high enough value to highlight. It was telling us that there was some support coming in there, or some manner of churn and shares changing hands there, more than usual, that were kind of clogging up the price movement, at least more than on the prior candle. And so that's where I would look at just the difference between one candle and the next, whether there's a highlight or not. I would just look at, maybe the candle prior, or maybe the one or two candles prior, and see if we're increasing versus that or decreasing versus that. But mostly, again, we're looking at the direction of price and then where the volume signal is coming in relative to the most recent price movement. So that's how I use the graph. Hopefully that answers your question, Walter. I think some fundamentals of price action are important to have, and probably can't touch on all of that today, but this covers most of it. You're looking at you've got a range, and this is a good example of what I said earlier, where you got a signal that happens as we enter a range. The range kind of develops over time. Then a signal happens as we hit the final low here, and this, if you can see here, there's actually a little bit of a signal here, and embedded inside here, I would expect to see some more highlighting, indicating that this range is resolved as we break out. And so a lot of times you'll find good timing signals on the far right-hand side of a range as we exit and enter into a new trend. And so those can give you good timing signals as we, as the range finishes. But this would have been a good entry candle as well. And to answer your other question, Walter, about how I would analyze this particular stock, this was a really good example of multiple time frame analysis using the volume. You can see there's really good highlighting here, showing the highs and the lows on the weekly time frame. You can see down here where we're looking at this during this range, we had a weekly signal come in, indicating there was some support here. Then on the daily, after the range had developed a little further, we had another highlight come in, telling us that there was some support down here near these lows. And then on the 30-minute chart, if I can find the right place here, so this was the volume signal day right here. So we had kind of an indecision candle where we moved up, then traded below the open, and then we moved back up and closed near the open. And so it was just kind of a indecision day. But the next day, we opened, moved below the low, kind of testing to see if there's supply down there, and running any stops that were down below, picking up any stop orders that are there. the larger traders in the market use those kind of stop runs to get the liquidity that they need to fill orders. And then as we made an attempt downward, volume came in to support it and say, no, we're not going down any further. And so volume came in to support it there. And then we have this nice series of inside candles, all inside the range of this volume signal. And then finally it was resolved here. So we exited the range. And so in this case, this would have been one way to take it would be to buy on the break above the high of the signal candle, which happened right here. And you can see that was a 30-minute playing into a daily signal, playing into a weekly signal. So it's stacking several time frames in your favor. If you wanted to get really extreme, you could have waited for the resolution of this final inside candle 3 candles after the signal, which didn't necessarily have any signal on it itself, and maybe there was something here on a smaller time frame. But since they were all inside the range of the signal candle, this was just increasing the risk to reward ratio as time went on. So you could possibly have gotten a higher multiple by waiting and taking the break of this final inside candle at 12:30. So that's how I look at things as far as that goes. I like the idea of stacking the weekly and the daily and the 30-minute, finding signals that all confirm what the other is saying, and taking trades in the direction that all 3 of those would indicate. And anyway, so hopefully that's useful to you, Walter. Mostly, again, we're looking for the highlights on the histogram, not really for any particular analysis of trends and that type of thing on the histogram. But if there's not a highlight and you're expecting one there, so like this one, I would maybe zoom down to a lower time frame and find and wait for a signal on that time frame to play into this larger price action type of setup here of inside bars. But if there's not a signal, then you can look down here and say, okay, is it increasing or decreasing versus the prior bar, even though there's not a highlight per se. And so that's another way to look at it. But again, just remember that we're looking at volume per range. We're not actually looking at volume itself. So we can't say 100% that a higher bar on this graph is actually higher volume. It's just higher volume for the same amount of price movement. So you can see a high bar here is not the same thing as a high bar up here. So just keep those distinctions in mind. This is volume divided by the range of the candle, and we're looking for high values of that particular kind of equation. You can see here I've got a new presentation style of the indicator coming out soon, and I'm still testing that on my own charts. And this is the Z-score presentation. This is essentially, instead of looking at the average and taking percentages of the average, in relative terms, or just looking at it in absolute terms and running an average on the absolute values, this is actually taking an average of the volume per range and then running standard deviations on that over the whatever length of time you set, and then highlighting based on the Z-score using that standard deviation. So if it's one standard deviation above the normal volume per range, then it would show a 1 here. If it's 2 standard deviations above, it would show a 2 here. And it would highlight differently at each of those thresholds. So this is the new version that I'm currently working on. It should be posted on the website shortly. And I actually do find that this one is a little more accurate than just the percentage-based relative presentation. It to clean it up a little bit further than the prior version did and increase the accuracy a little bit. I think on Walter's chart that he had sent me, his had highlighted a little differently. I don't know exactly what settings he was using, but he didn't seem to find this particular signal here, which the Z-score version did find. You can see the difference there. And so the Z-score evaluates that signal a little differently than just the normal average does. So that's kind of an interesting example of some of the differences that this will bring to the tool. So anyway, hopefully that will be out on the website soon here, and I just wanted to mention that. And I hope that walking through some of these setups and ways of looking at the histogram have helped Walter and anybody else out there that has the same kind of questions. And anyway, that's it for today, and I will talk to you next time. Thanks.